I have been working on an automated trading strategy for many months now, and it is finally production ready. So if you are into algo trading, then this video here is for you. This is the S&P 500 15-minute chart. You can see all our entries and exits on the chart. This is how the strategy performs over time, and the 713 handles that it is making in profit happened during the beginning of July until today, December 23rd. So we have a lot to talk about today, and to make it as realistic as possible, I also implemented an automated stop loss in the strategy. Although the strategy doesn't need one, I implemented it just to be as realistic as possible. Whenever we have a signal and price moves against us by 40 handles, we get kicked out. On the chart, it then says in purple, exit long or exit short. That is when we just move to cash. If there is not a purple entry on the chart, then we just flip-flop from being short here to long here, short here, long here, short here, and long again in the end. What is really awesome here about TradingView, we can look at all the stats that how our strategy actually performs behind the strategy tester button. Here we cannot just see how many handles we are making in profit. We also see how many trades we have, 56, 64% winners. Max drawdown, very important number, 110 handles, because if you cannot survive your drawdowns, you will never experience the profits of your strategy. So to be conservative, I like to multiply the drawdown of a backtest with 5. And if you can still survive a drawdown of 550 handles, then this strategy here is for you. Our average holding period is 168 candles, which is about 2 days. So if we click here, list of trades, you can see all the individual trades, entries and exits, at what time we got in, what direction, when we got out, and what the profit loss was. And if we scroll through those real quick, we can see it's pretty evenly distributed. It's not that was one large winner that was responsible. And here we can see we got stopped out here at 40. We can see that we have all sized winners. We have small winners of like 20, 30 handles, mid-sized winner of 50. But it is not that there was one huge trade that accounted for the vast amount of profits. Very important point. And behind performance summary here, we can differentiate between long and short trades. And during the testing period, the market made some 230 handles or so to the upside. So that our strategy is profitable on the short side while the market rallied, that is a very good sign. We're making 250 additional points on the short side while the market rallied 230, right? That is very good timing on the short side and a very good sign that the strategy is sound. We're making 455 handles with our long trades, and let's dig deeper. Here we can see percent profitable. We see 75% of our long trades are profitable and 53% of our short trades, which is to be expected in a bull market, that this number here would be lower. But what is the average win trade? On the long side, 34 handles. On the short side, 32 handles. So pretty much in line. Also a very good sign. What is very interesting here, the average loss per trade is 37 handles when we are wrong on the long side, but only 17 on the short side. So very interesting, very encouraging. But to be really sure if your strategy is good and works in real life, one has to test the rules on data that was not used during the backtest itself. And the scientists, they call it out of sample testing. So we have to apply a different time frame to the same rules and see if the strategy rules make sense in different environments. And to do that, because TradingView only gives us data in the original backtest that starts 5.5 months back on a 15-minute time frame, and in this case this here is the beginning of July, end of June. But if we hit that replay button here and then click on the chart, it loads additional data further back in the past. And if we then open the strategy tester, we can see how this strategy performs during this time frame. We're not making 700 handles, but we're making 277, which is awesome, especially because our drawdown here is shallower, and I believe these two numbers have to be looked at as a pair, because this here is your risk and this here is your reward. And if the ratio between the two is favorable, like it is in this case, then it looks like you have a sound strategy. Okay, but let's look further back in time, because what I really want to know is, right now we are in a bull market that is trending higher, not a lot of volatility. But this here, and if we go to the very beginning of this back test, this one here starts sometime in 2019, at the beginning, when the bull market started. When was it here exactly? Okay, it was actually January 1st. That is when this one started. But remember what happened in Q4 2018? We saw a huge sell-off in the market. So we have to see, how does this strategy work when the market goes south, and when it goes south quick. Okay, we click on this icon here and then again on the chart, and it loads additional data. And let's see how the strategy performs here. And we see we are making 335 handles in this environment. Our drawdown here is larger, so 160 handles. Let's be aware of that. But it is still excellent, because the price action was so different during that time, that we are still so profitable. 335 handles, and the drawdown a lot smaller than the profit is an extremely good sign, and it makes me very excited for the future. And I will be posting entries and exits on StockTwits in quasi real time, right? It's not automated yet, so when I get an entry signal, I have to manually make the post. And since the strategy is working 24/7, there will be times that I'm late, but it is pretty awesome. And if you wonder what this weird little thing here at the bottom is, this is the indicator this entire system here is based on. And no, it ain't an RSI. It's a lot smarter than an RSI. But the rules are pretty cool, very simple, because every time we get a reading above the red line here, it triggers the sell signal. Whenever we get a reading below the green line, we get a buy signal. And when we get a buy signal after we already triggered a long entry, then we simply ignore it. Like in this case here, we have a buy signal here that triggers a long entry, then we get another buy signal here, and it does not show up on the chart. So we do not add to positions, we only have one contract at a time. And when we get stopped out, there are times when we are 100% in cash, for example, after this exit here where we got stopped out. I hope all this makes sense, and I hope you can appreciate how simple the rules are, because if you've done any algorithmic trading, you know how difficult it is to create a system that has simple rules. In essence, we have two rules. We have an entry to go long and an entry to go short, and then, okay, we have a stop loss. That is 3 rules. To have a system with only 3 rules that works in totally different environments is incredible. If you understand backtesting and the science behind it, this gives us so many degrees of freedom to, I mean, if you understand statistics, you know how difficult it is to create a system like that. It is almost impossible, and that is why I'm so excited. So watch out for these posts that I'm going to do by hand manually on StockTwits. And yeah, hopefully you appreciate what is coming your way. If you have any questions, hit me up on StockTwits. My handle is @OptionBob.